Who really controls oil prices? Is it the United States? Is it OPEC? Or is it someone else behind the scenes? Why can one meeting in the Middle East suddenly move global markets? Today, we're breaking it all down in simple animated form. Let's begin. Oil is not just fuel. It gasoline prices, airline tickets, food, transportation, inflation, stock markets. When oil prices rise, the entire economy feels it. That's why understanding who controls oil is so important. Animation. World map. Zoom into Middle East. OPEC stands for Organization of the Petroleum Exporting Countries. It includes major oil-producing nations like Saudi Arabia, Iraq, Iran, UAE, Kuwait. Together, they control around 30 to 40% of global oil production. But here's the key. They control a much larger portion of global oil reserves. Which means they have power. OPEC doesn't directly set oil prices. Instead, they control production levels. Here's how it works. If oil prices fall too low, OPEC cuts production. Less supply, higher prices. If oil prices rise too high, they may increase production. More supply, lower prices. It's all about controlling supply. Animation. U.S. oil rigs. The United States is one of the largest oil producers in the world. Through shale oil production, the U.S. can increase supply quickly. This sometimes reduces OPEC's control. Now oil pricing is a power balance between OPEC, United States, Russia, and global demand. No single country controls everything. Even OPEC cannot control demand. If the global economy slows down, factories reduce production, oil demand drops, prices fall. If the world economy grows, more travel, more energy use, prices rise. Demand is just as powerful as supply. Oil prices can spike instantly because of wars, sanctions, political tensions, natural disasters, for example. If conflict threatens oil supply in the Middle East, markets panic, prices jump. Sometimes prices move based on fear, not actual shortages. Smart investors watch OPEC meetings. U.S. production reports, global economic growth, geopolitical tensions, energy stocks often move with oil prices. Understanding oil control means understanding market opportunities. Who controls oil prices? Not just one country. Oil prices are controlled by OPEC production decisions. U.S. output, global demand, and world events. If you want more simple animated energy investing guides, subscribe to Energy Investor Pro. High voltage, smart energy. Smart money. See you in the next video.